Happiness is freedom. Freedom is having the choice to spend your time doing things that inspire you. Most people want freedom, but many people don't have a clear objective, a roadmap, or a strategy to achieve it. Everyone deserves to live an inspired and free life. I believe that when we're free and able to focus on our most meaningful work, we simply become better human beings. We can give more, care more, support more, and love more. I'm an investor, a trader, and an entrepreneur, and I get to spend every day doing what I love. At the age of 29 years old, I became financially free, and since then my mission has been to help and inspire other people to achieve the same so that they can be more of who they really want to be. Always Free is about having a free mind, being free to question the status quo, free to take risks, free to say no, free to say yes, free from social idealisms, opinions and beliefs, free to disobey, and free to wake up every day and spend your time to make a difference that inspires you. You can have it all. Living a life designed by you isn't a stroke of luck or a result of circumstance. It's a choice. So if you want to learn how to become free and live an inspired life, join me for the #1 show for financial empowerment and wealth creation as I share my insights, tips, strategies and advice on what allowed me to be always free. Welcome to the show. I'm your host, Jason Graystone. Well, welcome back to the show, guys. I hope you're doing well. I hope you're having a nice week so far. This is the Always Free show, and if it's the first time you've tuned in, this is the #1 show for financial empowerment and wealth creation, and you can go and check out the podcast as well, which I'm sure you'll love. And if you're not new, welcome back. Let me know in the comments if you're here. Let me know what you've got out of this show to date. And it's always good to see the same faces here each and every week as well. And stay to the end of the show because we'll be giving away some goodies as well in the competition time. This week is going to be a little treat for you guys because I've got a very good friend of mine, Vicki Wusche. Welcome, Vicki.
Hi.
Vicki Wusche is on the show because Vicki Wusche specialises in property, don't you, Vicki?
I do.
So tell the people watching at home a little bit about you and what you do.
So after being made redundant, one of the key things that I realised is I never wanted to have anyone else in control of my money again. To be able to just pull the plug at any point and risk the life that I'd built for my family. And I looked around and, you know, the man of stocks and shares and trading, and I just thought, oh, is that me? And I thought I want to be out and about more rather than tech. And we've been talking tech today, and I could get lost in it, and I wanted to be people-based. So I found property, and property gave me a tangible asset that I could leverage through a mortgage, that I could add value to and everything else. And so I went with property investing, and that was back in 2008 properly. But I had dabbled a little bit in 2004, but not knowing what I was doing. So 2008 onwards, and I started doing it for myself and my family. Then I started doing it for clients. Then I realized it was a business. Then I realized it was a lifestyle. And then I realized, actually, if you think it's all about property, you've missed the point.
Yeah, right. And since then, how many properties have you invested in yourself?
Oh, gosh. Well, I mean, it depends whether it's what we bought and sold, or whether it's what I've done for clients. But I mean, if we include clients, it's in the hundreds. Mm-hmm. If it's for what we've bought and sold, at one point, I think we probably had 23, 24. We've just been, and we're going to talk about flipping at some point, but I've just been trading some out and bringing some in. So that to me is churning the portfolio. So we've just been churning the portfolio at the moment. We pulled some money out of property to do a bigger development. So it's something that once you've got that foundation of some properties in there, it gives you both the confidence and the flexibility and the finances to do other stuff. Yeah.
I think what's really important and what springs out to me the most is not really the amount, it's the time that you've spent in that market. And I always say, you know, you should never try and time the market. You should always try and, put time into the market rather than try and time it. And that's something that we're very aligned with, regardless of the strategies that we use and what wealth vehicles that we're investing in. At the moment, we're at a time where people are thinking, is it the right time? You know, what should I do? Should I buy and hold? Should I flip the property? And of course, our approach to investing is very timeless. It's more about income, it's more about freedom. And if you're watching this, freedom comes from income. Freedom of choice comes from having an income, having an asset that you can buy that is producing income. And I think what's on a lot of people's minds at the moment is very much around where to put their money and what are the benefits of doing one over the other. So if there was anyone listening to this that was thinking, look, I've got a pot of cash right now, what are the benefits of me going into property? Where would I start? What would you, what advice would you share with them?
Well, I think it depends on the size of your pot for a start. It depends on how much time you've got, how good you are with the maths, because you do need to be on your maths with this. But I would say always invest in property, always have a foundation of property, whether it's 3 or 5 or 10, always have some properties running along any sort of investment strategy you've got. Now you can start off on Jason's side and make your money through your trading, or you can start on my side and make your money through your rental income and then take your rental income and trade. But the market will want to lie somewhere between the two of us. It always lies between what's going on in the stock market. When you're doing well, I'm probably a bit flat, and when I'm doing well, you're probably a bit flat. So it's about, and that's why it's sort of a perfect marriage between the two. But what I would say is focus on one. It would be very difficult if you are following Jason's trading route to then suddenly switch your head into flipping or even buy and hold, because it's a whole different set of thinking that you need to get around. There'll be a few of you out there that are exceptional at your numbers and really quick learners, and you'll be able to do both and go for it. But for most people, focus, and that's the whole reason of focusing. Focusing will bring you your expertise, your skill, and your length of time into that. So, and just to pick up on the time versus number of properties, it's not about having millions of properties or even hundreds of properties, because hundreds of properties will kill your time. Hundreds of properties is setting up a big business with staff and everything else. If what you're doing is using property as a way to leverage your money in order to gain time, then you want to be very careful about the number of properties, and it's smarter to have better properties that produce better and have fewer of them. I've had clients come to me and say, I want to invest in 100 properties. And my first question is, why? And they go, well, because 100 properties sounds like a good number of properties. And I went, and what strategy are you following? And whether it's simple buy to let with a family, or whether it's leveraging it up and doing student accommodation or HMOs, houses of multiple occupancy. How many tenants are you going to have? How many times are they going to turn over? How much maintenance are you going to have to deal with? How many rents are you going to have to check? You'll have so many rents coming in that you'll actually have to employ somebody to manage all your rents, and you'll have to manage them.
Yeah. I say the same thing when people tell me, I just want to be a millionaire, I want $1 million, I want 2 million. And I'm like, well, what will you do with the 2 million? Because you need a strategy in place to actually give you the life you want. You can't, having £2 million, or even when people say things like, I don't know, they just pull a number out the air and they think that that's going to solve all their problems. What they don't take into account is, as Vicki was just saying, the more speculative any investment, whether it's property or stocks or trading or whatever it is, the more speculative it is. In other words, the more you're involved in it, the more of a speculation it is, the more time it's going to take, because it requires more of a skill to be learned, right? You need more knowledge on the subject. The less passive it is, the more skill and knowledge is required. The more time it's going to take, the more effort, the more energy it's going to take, the lower leveraged it is, and it's going to end up with you capping out and thinking, what bloody hell have I done this for? I wanted freedom, and now I've
got a full-time job.
I've got a full-time job managing this headache. And also, yes, the returns are potentially higher on a speculation. So if you're flipping a property, yes, you're going to get a higher return in a shorter space of time. Maybe over a long period of time, maybe not. But at that instant is where your focus is. And if you're doing that, you are a trader. You're not an investor. I always say, if you're investing, you want to take your trader's hat off, and if you're trading, take your investor's hat off. If you can do both, as Vicki just says, amazing. And I recommend that you do both. You do both, but you focus on putting the majority of your effort and energy into a passive investment strategy, and then add the little flips for
for
volatility.
fun.
Yeah, for fun.
Crikey, because I mean, if you
spending money.
Yeah, I mean, if you get to the stage where and you might find this shocking, not you won't find this shocking, but the listeners might find this shocking if you're thinking that you want £1 million. But if you looked at how much money you spend now and just think to yourself, how much is enough just to cover my bills? I talk about enough, more than enough, and much more than enough. So enough covers all your basic bills. So it doesn't give you going to the pictures or going for meals out and takeaways, just the essentials. You reach that number and your head will flip with the possibilities that are open, because you no longer have to worry about the basics in your life. Then you get to the next level so that you've got more than enough. And most of you are going to have more than enough already, because, and the way I know this is because if they're watching this or listening to this, you've got tech.
Yeah.
And if you've got tech, you haven't got an empty stomach and no shoes on your feet and no roof over your head. It's just, that's not the way we work. You have to. So you're doing all right already. Now, whether you know you're doing all right and you check your maths or not is a whole nother question. But then when you get to the stage where you've got much more than enough, quite frankly, could be 10K a month. That's all it needs to be. And for some of you, it could be 5K a month. Now, those numbers are so easily achievable, both through property or any other strategy that you want. If you've got that coming in the bank, you don't have to work anymore. You don't have to worry. You've got surplus cash on the side. And then you could start thinking, right, well, what do I really want to do with my life? Where are my passions? And that's where I start talking about a wealthy life. You know, do you want to do gardening? Do you want to learn a hobby? Do you want to help someone in your community, or maybe a whole community that you want to help? You can start to think so much bigger. Then at that point, that's for me where you might start to do the speculative stuff, because you've got your baseline. And I know you use the word passive. I like to think of it as systemized rather than passive, because passive implies you don't have to do anything. Whereas whatever it is, let's call a property portfolio, is systemized to such a degree, you're spending half a day a month maybe managing your portfolio. You've now got 19 and a half days, if we only count weekdays, to do something meaningful, to create a legacy, maybe to spend time with children, grandparents, great-grandchildren, anything that you want. You know?
Yeah. I think you hit the nail on the head. And I think when people chase passive income, as you say, it's when we talk about passive, it's important to understand that passive is in relation to how long something takes you. Passive is just measurement of time. And mobility is also a measurement of leverage, which the more mobile something is and the more passive it is, the more leveraged your income is, the more free you feel. And both of those are on a scale. So something could take you 4 hours or 8 hours. The 4 hours is more passive than the 8 hours, and you can reduce the time down. So when we're talking about adding staff, potentially that's adding more and more time to your day, which is less passive. You might be able to do it from anywhere in the world, or can you? Do you need to keep visiting certain properties and stay within a radius? And the further out you can do that and manage that, the more leveraged. So I agree with passive income. I like to use the term leveraged income, and leveraged is a measurement of time and space, and both of those are reducible or increasable, if that's a word. But the thing is this: you only get leveraged income from assets. And assets you can create or buy, and that's it. So that's the only way you can develop leveraged income. Property is the income that Vicki's created through. By the way, this is a fantastic book called The Wealthy Retirement Plan, which you just mentioned. This talks all about it. And if you want to grab a copy of this, where can they find this, Vicki?
Oh, good old Amazon, of course.
Amazon, yeah. This is a fantastic book. I've got 2 copies. This is the one that I'm going to give away to a member of this show, or a viewer of this show on competition time. Tell us a little bit about why you wrote this book.
That was really the pivot point where I realised that it was more about property, more than property. And I think I started the germ of that book way back in 2015, because the more clients I spoke to and the more and the more conversations I had with them about, why are you doing this? Why are you doing this? And some were coming forward with, the numbers, like you were saying before, I want to be a millionaire, or I want 100 properties. And actually, when we dug into it, it wasn't that. It was that they wanted to be with their family. And I knew that the reason I did it was because I wanted to be able to control my finances so that nobody else could control me, and therefore I had freedom. Because if no one's controlling me, then I must be free.
Yep. Exactly
so
that.
That's the way it worked out for me. And then I started, and I'd always thought about it as a business, and I'd been talking about it as a business. So then I thought, well, what is it really about? It's about wealthy, and what does wealth mean? And a lot of people will fall into two camps. They'll think of the definition of wealthy the way someone else will think of the definition as rich, and somebody else will think of rich as wealthy. And for me, rich is the amount of money you have in your bank, the accumulation of your bank accounts, whereas wealth for me is the accumulation of your entire life. It's not just the money you have, it's not just the cash, it's the friends, it's the lifestyle, it's the health, it's the wealth, it's the relationships, it's everything that you have, the joy. Rich doesn't, to me, imply the joy side of it.
No.
So wealthy is when you are doing what you love the most with the people that you care about the most, and then you can insert anything into that sentence.
So in other words, a choice, right? And
the
more choice you've got, the more wealthy you are, and this is very much why we're aligned in our message and while Vicky's on the show. So grow and grab this book. It's absolutely a fantastic book, and it will give you some real strong insights into why it's a good investment, and really more to do with who you want to be and you know why that's important. If you want to achieve this feeling of freedom, because you don't just get it from £1 million and you don't just get it from 100 properties, you get it from a mindset of creating something that's a legacy.
And I think the other thing that I talk about in here is this notion of retirement, which is very much, and I might go a bit woo here, and you might want to cut me out of this section and we'll bring it all back to being grounded. But there is something about, we are put through a channel, if you like, from school, right? So school is designed to teach us to read and write. It doesn't always do that well for people. But what it also does is it teaches you to be an employee. And the reason it rather than teaches you, it trains you to be an employee. And it trains you to be an employee because it tells you that what you need to do after school is go to university. And by going to university, you're going to waste 3 years of earning potential and incur 3 years of enormous debt. And then when you come out the other end, you have to get a job. You can't be entrepreneurial at that point because university has put you through the mangle. And so it's very few degrees, as in university degrees, that will teach you to be an entrepreneur to come out the other end. Most of them are training you in some core topic. Then you come out the other end, all you're capable of doing is getting a job. You get a job, and of course, once you've got a job, you may get a car, you may get a house, and then you get more debt, and then that's it. You are on that merry-go-round, and there is no way that you are getting off. And that's it. That's the end of your entrepreneurial life. It's the end of your freedom. And more importantly, that word retirement then just sits out there in your future. It's determined by somebody else. First, the government, because it used to be 65 for men and then it's gone up. You know, what age will you be permitted to retire by government?
Yep.
And then you may not be ready to want to give up your job. You may actually be lucky and be one of the few that loves the job that you have, don't want to give it up, or financially can't afford to give it up. But because you have a birthday, some employer goes, well, that's it. You're no longer required. Please leave the building.
Yeah.
You know, who wants that? Whereas if you have a non-traditional wealthy retirement, basically once you hit that number where you have got enough money to cover your basics and more than enough money to cover all of the fun that you want to have, you are retired.
Absolutely.
At whatever age you want to be.
Yeah, I agree 100%. 100%. Amazing. So look, just to finish off then, if anyone was thinking about, if anyone had property right now, here's a question. If anyone had property right now and they were a bit like, this is a mistake, what I've done, or I'm not quite sure what I'm doing at the moment, and they, you know, you get these people that buy properties and they don't know if it was a good decision or not. They just had a bit of cash and they've done it. What would be your words of wisdom to someone who's got a property with that longer term view?
Don't panic. first thing. Definitely don't do anything without speaking to me first. Have a call. I can fix it. I think the thing is, as long as that property is making you money and not costing you money, you're okay. Whatever you had thought you were going to do with it, you're fine. If the property, for whatever reason, is costing you money, and I know back in the day, I was offered to buy off-plan flats. Right. Where we would put very little cash in, maybe $3,000 of cash in, because it was all, financed in different ways. But actually we were going to have to feed the mortgage. How's this for an investment? Hi, I've got an investment idea for you. It's only going to cost £3,000. And you go, oh, well, that's all right. That's not bad. What's my return? Minus $250 a month.
Oh,
okay.
Sounds amazing.
Yeah. Anybody on the maths would know that that's not a good idea. And there are plenty of those out there. I spoke to a client and she's bought a hotel room in a hotel in Liverpool. Phase 1 is up and running. Phase 2 looks like it's going to go bankrupt. $60,000 in a hotel room and nothing to show for it.
No.
So it's really interesting, the things that people will invest in. And the key is, investments are for the long term, and investments have to give you a positive return, not a negative return. If you're feeding it, it's not an investment.
Such an important point to really wrap this up on as well, because I think when people go into property and they get too emotionally attached to the property and they start injecting their ideas of where they'd love to live. And I just want to say at this point, right, there is a skill involved. Knowing, as Vicky's first point was, know your maths, know your numbers, or maths if you're not from South London. And the thing is this, right? People think that property goes up in value. The brick and the plastic and the wood and the timber does not go up in value. It's the land that the property's on that goes up in value ultimately. So if you're getting too emotionally attached to the house and you're putting all this nice decorating, and there is a sweet spot there where you're going to keep the profit net positive, right, rather than lose money. And if you start, I always say, if you let your emotions get involved with any of these investments, you've already lost.
Definitely.
So there is a strategy. You can't just go and buy a property and then think, oh, I'll do it up, because over the long run you might find that you've just not returned anything. No. And I think a lot of people neglect maintenance costs and all the breakdowns and repairs and all that kind of stuff. So if you are going to go into property, I'd say Vicki is definitely someone that you should speak to.
Spreadsheet over emotion every time.
Spreadsheet over emotion. I love that. Amazing. Well, that just leaves, hopefully you got some value from that. All of Vicki's details will be below the show notes. And if you're in Tears of Freedom program, by the way, Vicki's very kindly going to deliver a couple of ultra valuable lessons to the guys in there for investing long term and flipping and trading properties, so or more speculative flipping. So look out for that. And that just leaves competition time. So competition time, let's have it. The way to win competition time is to be here every week and engaging the chat. Screenshot this and share it on social and tag me in it. And the winner of competition time is going to be winning a book and some always free goodies, a hat and a hoodie. So we're going to select a winner. To see who's won this week, check out the comments in the description. And if your name's there, reach out to admin@graystone.education. And congratulations. And until next week, that just leaves us to say, have a great rest of your day and weekend. Thank you, Vicki.
Thank you, Jason.
And we'll see you then.